All right, well, welcome and thank you for joining us for this afternoon's public education session. Today, we are very pleased to have members of our tangible personal property team to review TPP and answer some common questions for business owners, operators, CFAs, and CPAs. So without further ado, I'll hand it over to Lori.
Thank you very much. We're so excited to be here. Happy to see a lot of faces that I've seen before and welcome new people. I have with me here, I'm Lori Dorian, and I have with me Kalani Cooner, who is one of our senior appraisers in the office, and I'm the director. So we're excited to get started and start talking about the world of TPP. So with that, let me pull up our presentation. Give me 1 second. Okay, and off we go. So today is our public education on tangible personal property. So with that, I want to say we're excited to start this first time we've ever been out in public doing a presentation in quite a long time. We've all been either homebound, working from home, or in an office, very isolated. So welcome, welcome. So in the next hour, we're looking to go have an overview of our tangible functions in the property appraiser's office. That works. Working? We did. Oh, there we go. So, assessment of tangible personal property. We are a small division in the property appraiser's office. There's a total of 9 employees that have to assess all businesses in Pinellas County. And it can be anything from very small to very large. So we're going to get into what is tangible personal property. Just think about it as any business that you go into. We're looking, as a person that's looking to purchase something, you're looking at the items that they sell, which is not tangible personal property. What we look at is what are they using to make their business function? What is the equipment? What is the furniture, fixtures, and equipment, and possibly leasehold improvements that they're using to make the business operational? So a tangible appraiser is not looking at what they're selling or what they're manufacturing. They're looking at the equipment that is working that process. They're looking at the decor package in the business. They're looking at how many desks, how many computers. So we don't actually look at to purchase anything. We're just looking all around, up and down, around the building, looking for anything that would be considered tangible personal property. And what we do in our office, which is a little different than the other departments, the real property and the commercial property, is the Florida statutes require you to file a tangible tax return. We mail out those returns in January, and on those returns, we're requesting through the return that you fill out all of your equipment that you use to run your business. And that could be anything from a very small business, as you see in the picture, a little office, home office, to a very large corporation like the transmission lines that you see for a utility. Kalani, do you have anything else you want to add to that?
Yes, we do different businesses from restaurants, government contracts, anything that's not tax exempt inside of Pinellas County is we consider tangible.
So our tangible department, by the numbers, we have approximately 30,000 business accounts, with 10,000 of them actually paying a tangible tax bill.
Yep.
As you see in the graphic, most of the locations are in commercial zones, commercial settings on major streets. That's 82%. These are canvassed every year by our appraisers. So we're out looking at businesses, walking into new businesses, greeting taxpayers, picking up new businesses, looking for them, just monitoring them if they moved each year. And then we also have home-based businesses, that's 11%, that's a small percentage. And a lot of those are tax exempt, they don't pay a tax bill. And then the freestanding locations, for those of you that aren't aware of that, that's the equipment that's located all over the county that you don't really notice. It's the billboards, it's the cell towers, the utility lines, the gas transmission, it's under the ground.
Businesses you wouldn't typically notice.
And leased equipment. Companies that lease anything from a copier to an MRI. So we have 7% of those accounts, and those accounts share a $25,000 exemption. And I'll get into that in a few minutes. But let me just let you know that our Pinellas County tax roll is assessed at $5.08 billion, and with a taxable value of $5.303 billion. And what that difference is the exemptions. So there are several different types of exemptions that can be applied to the tangible account. That over $50 million exemption, the majority of that is going to come from tangible tax return. You are automatically going to get that exemption. Failure to file that return, if you are required, you would lose that. The second exemption that we have, did you want to add something?
No, now that $25,000 exemption is for businesses even if they're small. Say if you're a mom and pop shop with a laptop and a TV, you are still required to file for that. Initially, for your first, to gain that exemption.
Right. The second one is one of our newer exemptions. It's renewable energy. That is if you install any renewable energy sources in 2018 or later, we're going to assess that piece of equipment and exempt 80% of that assessed value. In Pinellas County, that's mainly solar panels, but that could go to other types of renewable energy. Kalani, you want to expand?
It depends on geographical location on what people are using. Here in Pinellas County, we don't really necessarily have wind farms or geothermal energy, but Colorado, where I moved here from, it's prevalent to have wind farms and.
Yeah, I don't think we'll have any geothermal here. I don't think that's going to happen, but possibly wind. I don't know.
Also hydroelectric.
Yep. Well, yeah. The next one would be the economic development ad valorem property tax exemption. That's the DR 418, and that is sent to us. Oh, I'm sorry, I missed the institutional exemptions. I'll get back to that. But this is filed with the city and the county and then sent to us. It's from another agency where if a business comes into Pinellas County, a new business or an existing business that wants to expand and bring in high-wage jobs, they can file for an exemption on their real property as well as their tangible personal property.
As long as it's a minimum of 10 high-paying jobs per business that relocates to our county.
That percentage can change depending on what you're bringing to the county. The institutional exemptions, that comes from another department in the property appraiser's office, and that is in the institutional department. When we have appraisers out in the field canvassing for businesses, they also must pick up any church, museum, nonprofit entity out there, and they do walk in and they let them know that there is a possible exemption that they may want to apply for by March 1st, and make sure that they let the department know that they picked up a new business that might be exempt so that they can send them the appropriate forms. Kalani, you've done some of those correctly?
Yeah.
Correct?
Yeah, we set up an account with them. We talk to the business owner and we ask them what the store is involved in and whether they're nonprofit or not, or if they're a nonprofit organization, and then we create an account for them and then they start the paperwork for their exemption.
Right. So in fact, close to us, we have a Goodwill. They would be tax exempt as well. There's an array of a lot of businesses that would be considered tax exempt.
Yep.
The last two exemptions are disability exemptions, veterans, and widow and widower. Those can also be applied to your tangible account, but there's limitations on that. If you have a veterans on your real property or residential property, you can only have one of those, but you can add another $1,000 to that if you have another exemption that you can apply for the 500, a widow, widower, disability, or blind. So it's very rare for us to have one of those types of exemptions, but you can apply them to a tangible account. So let me give you a breakdown of what the sectors we have in Pinellas County. You know, we're a very dense county, lots of businesses. Then they range from you know, the small manufacturer, as we said, to the mom and pop. The biggest percentage we have here is the real estate rental and leasing and the retail trade. Obviously, we have a lot of retail in this county. That's 16%, and the rentals, leasing, apartment complexes is at 14%. The smallest number up there, utilities, at 1%. It has the least number of accounts, but it actually is the biggest assessment that we have in our department. So this gives you the sectors that we have to understand, the types of equipment that they have in their business. And I'm going to give Kalani a little time to talk about how we have specialties for the appraisers so they can learn a better understanding of what is out in the businesses.
Yeah, as far as tangible is concerned, there's so many business types. There's industrial and manufacturing, there's leasing, such as Lori said, home rentals, there's mom and pop restaurants, all the way to chain restaurants. We also have government contractors. No appraiser could know all of that information for every single piece of equipment. So we designate specialties to each appraiser, and they become experts in their field for whatever specific business that is. Like personally, I would do a lot of manufacturing, a lot of industrial. I also did a lot of restaurants, chain restaurants, and fast food. We have Carlos Ayala, who handles a lot of our gas stations, and we have Haley, who just took over restaurants for me recently. So
yeah, so we specialize the appraisers so they can understand what they're looking at and get a better understanding of what fair market value would be for that type of equipment. That's our sectors. Let me move on to the important dates everybody should know for the tangible personal property. January 1st is our assessment date. That's for everything that we assess at the property appraiser's office. That's real property, commercial property, and tangible property. At this time, we usually mail out the postcards. If you are under the $25,000 exemption, you're going to get a postcard, and I'll get into that a little bit further down. And we also send out the tangible returns to those accounts that need to file that return. On March 1st, that's the deadline for the institutional exemptions. That's filed through the DR 504 to the institutional department and then filtered down to our office. The biggest one I want you to be aware of is the March 31st deadline to file the 30-day extension. The due date is April 1st, but if you need an extra 30 days, you must file it by March 31st. The statute states that it has to be approved before the due date of the return. So you can send that. We have that online, and I'll get into that a little further down in the presentation as well. And then if you don't get the extension, April 1st is the due date of the tangible tax return. If you want to avoid any penalties. Also, the DR 492 return of pollution control devices. Kalani?
And May 2nd, if you did file an extension, it brings you up to May 2nd that you have as far as an extension. But you can get a second extension.
For another 15 days. You can request another 15 days. The first extension is automatic. The second extension is usually an extenuating circumstance. It has to be approved by the property appraiser to add that extra 15 days, which would take the return due date into the middle of May. It makes it very difficult for our office to process, receive all these returns that late and meet all our requirements to the state, to the Department of Revenue on our estimates of value. So it has to be an extenuating circumstance for us to even give that 15 days. It's very rare.
Such as a hurricane or something, natural disaster.
Well, that would probably give them more, I think. I don't know. Luckily, we haven't had that here. So And then in August, the trim notices are mailed out. If you have real property, you've seen those. They're also mailed for the business accounts. They tell you the assessment for the year and the proposed taxes. It also will let you know if you have any exemptions. It's very important to review and give us a call if you have any questions on it. That's the time of year that we're going to take a second look at the account, because during the year, once we get those returns, that's all we're doing for many months, and then trying to get to the end before we have to get to the trim notice. So it's important to give us a call. Perhaps you filed a return and we never got it, so you've lost the exemption.
Yep.
Any other reasons why they would give us a call? They don't like the value?
They to protest, to go to set up a case with the valuation adjustment board to appeal their value that was placed on their property, or there is some sort of error or in the return and they would like to send an amended return, we can do that as well, discuss it.
That's why it's very important to look at that trim notice so that we can update the account and discuss any issues that may be in need of discussing. And then in October, the roll gets certified to the state, and we are done with the year and starting to work on the next year. The final thing on this important date list is the November 1 date, which sends the tax collector sends out to the tax bills. So the tangible tax bills will go out on that date and are due by March 31st of the following year.
I have a question though. Let's say if they're filing their tangible tax return, are they required to file the pollution control devices DR 492 at the same time?
They are. That is required on April 1st.
Mm-hmm.
They have to give us time to review if it meets the requirements of pollution control. And then sometimes we can go to the EPA and ask them to give us a look at it and let us know exactly if all of the equipment would be considered pollution control. Because we do assess that differently than the rest of the equipment that comes on the tangible tax return. So that's why that is due on April 1st. Even if you get the extension, that is due on April 1st. So let's move on to the next slide. This is forms that are available on our website at www.pcpao.org. If you haven't been there, please go. It's got all of our forms and some information on the tangible personal property's role in the property appraiser's office. If you didn't receive your DR 405 and you need another one, you can download one on the website. You can see our economic life table. That table is the table that we use to assess each type of business. It's a range of 3 years to 30 years. So we want you to detail that return. So if you have a computer, we're not going to put it on a 20-year life or a 30-year life. We need to know exactly what you have. We would typically put that on a 4-year life. If you have some manufacturing equipment, we would probably put that on a 10-year life. The cellular towers, we put those on a 20-year life. So the equipment really needs to be itemized so that we can put you in the correct category and assess the property correctly. And then what we look at is the original cost of the equipment, including sales tax, installation, and delivery on that return with the original year that you purchased it and your estimate of value. And we'll get into that a little bit further down as well. The next thing we just talked about is the extension request. You can go on our website. It's very easy. Click on that link and you can list as many accounts as you would like, up to 20 on one request. Once you fill in the information, we really need the name, DBA, location, and if you have the account number, it makes it a lot easier for us if we have an account number on that form, and I'll show you that down further in the slides. And then the final thing is the business update. We really need to, and you can find that on our website as well. Anything you need to add?
Another thing good as far as the business update, it's all self-contained. So anything that's regarding the business that is being changed can be placed on that form, even a name change or if you're changing anything specific. like you're selling to the business, and then we can send a sales verification letter with that
Here's a sample postcard that we send out. It should be a yellow postcard, but this is the best I could put on the screen. So, this is what we mail out to the under 25,000s that we talked about, the ones that have already filed an initial return and are under 25,000, those accounts, that 2/3 of our accounts get this postcard. And up in the top left, you'll see that we tell the business owner what their assessed value. In this case, it's just a sample, so it's filled with X's. But we let them know in the beginning of the year what their assessed value is from the prior year, so that if they add equipment, well, like with every tax benefit, there's an exception. In this case, you're under 25, but you've added a lot of equipment in the new year. That means you're going to probably have to file a tangible tax return if you go over that $25,000 exemption. So you may receive this in January, and we may find later in the year, as we're canvassing, that you've added equipment and send you a tangible tax return. If you do get a tangible tax return, you're going to need to file that.
And one of the instances I recommend is that, like it says on the postcard, if you're under 25,000, you get that exempted yellow postcard. But if you add some equipment and you don't think you're necessarily over the 25,000, I always advise to file. It's always better to be err on the side of caution and file.
Or we do get a lot of calls on that.
Yep.
They're asking, what is their assessment? Usually postcards seem to get lost somewhere, and they'll call us and we'll let them know, and we'll discuss what they need to do if they need to file, and or we can give them a copy of their postcard.
Nikki has a question in the chat. Sorry,
Sure.
Larry. Nikki wanted to ask if we offer a 30-day extension request online.
Yes, it is online. I'm going to get into the online form that you have to use. That's coming down in a few slides. But yes, it's
very simple.
It should be very simple. You just fill out the name of the business, the account number, and the location.
Just 3 fields.
And for each account that you add onto the form, you'll get a separate sheet so that can be attached to the return. Or once I go into the DR 405, I'll explain you can attach it to the submittal as well. A lot of CPAs or accounting firms don't want to have a list of all the accounts that they apply for an extension, so we send them an individual sheet for every account that they require an extension on. So here's the DR 405. This is a new form that we put on our website this year. I want to spend a few minutes on this. It's important that you save the form to your desktop and then open it with Adobe Reader. That's how this form functions. It's a fillable form that you can use, especially if you're a small business and only have limited assets.
Yep.
It's very easy. Fill in each. The cursor will take you through each field. If you don't know account number, that's fine. You name and address. Fill out answer the 9 questions. And then the zeros are there because it's going to look at the second page behind this, where you're going to list your assets based on one of the 10 through 25 options. So for line number 10, your office furniture, office machines, and library, you want to, on the back side, put that 10 in one of the fields where you're going to list your equipment, list your furniture, give us your original cost and age and your taxpayer estimate, and it will total for you on this page. And if you need additional pages, there's a link to get additional pages at the bottom of the document. And then once you're finished with that, you can sign it. We take the electronic signature, and the link will take you right to our TPP Confidential website.
But let's say you're not a mom and pop business. Let's say I have a huge multi-million-dollar company with extensive assets.
What are we going to do? Yes.
Yeah, would I be able to attach an Excel or send you some other documentation?
Yes, that's a good question, because it gets time consuming if you're going to type in every type of equipment you have. So we do have some Excels on our website as well that you can copy and utilize and download, or you can use your own Excel. We'll take any Excel as long as you list the equipment, with the original cost and age. And if you're a leasing company, we get a lot of Excels, the location of the equipment. And then it could be attached once you submit this summary page. We'll need the summary filled out and signed. We'll still need the first page filled out. You get the link to our TPP Confidential and just attach your Excel with that and submit. So we love Excels. Actually, we probably prefer an Excel filing, but we do ask for the first page of the return filled out with the summaries so we can tie together.
And since Pinellas County is trying to reduce its carbon footprint here, we're trying to go through a more digital aspect, and so people will be able to submit their forms online instead of paper. One of the best aspects of that is you get a read receipt and instant verification that you filed a timely tangible return.
Right, you get an automatic response that will tell you that you filed, and that's your document to show that you did file timely.
Which means it would never get lost in the mail, and it's instantaneous as far as when we receive it.
Right, how many times do we get a call that's, I mailed it in and we didn't get it?
Daily.
We get a lot of those calls. So
Daily.
you can eliminate that by filing online. Just a few things about what's required. As we've said, first year business owners must file. That is your application for that $25,000 exemption. So when they're canvassing, that is one of the things that they go into and walk in the business and let them know, please file the first year, especially if they're under the $25,000. It's not an automatic exemption. You need to file that form with us.
Yeah, and sometimes as we're more educators than anything else, and when we speak to the people who own different businesses, a lot of people, they don't know that tangible even exists, or sometimes in some cases their accounting department or CPA will be under the impression that they don't have to file because they're under $25,000.
Mhm.
But like Lori previously stated, you must file a year to get that exemption.
And any business that's relocated to a state that doesn't have tangible personal property, it's a learning curve for them. So we like to educate them by walking in those new businesses and letting them know. So as we said, we want to know all the equipment that you have, including leased items, fully depreciated items, anything that's expensed with a life of greater than 1 year needs to be on that return. People forget certain things, their signage outside, their security system, that's all tangible personal property needs to be reported.
Well, what about inventory? Do they have to file on inventory?
Lucky, we're in the state of Florida and we don't tax inventory. So.
Well, that's good. But that's just for what we know of Florida, right? It's not nationwide.
Right. That is not nationwide, but that is in Florida. We are just assessing the equipment that you put in your business to make it function. And that includes leasehold improvements. If you're bringing in a manufacturing piece of equipment, it's not going to operate unless you put in those lines to make it operate, possibly special flooring, maybe special piping. I have a couple of examples for specialized flooring, maybe a dance studio, and they're having to put certain flooring down so the dancers can slide easier or move easier, or a gym, underneath the equipment, they'll put some special padding.
Padding floors, yeah.
Computer rooms, they raise the floors and they put special air conditioning in there as well.
Server rooms?
Server rooms, correct. Decor package in retail stores. A lot of people forget because it's attached to commercial property that they don't own, thinking that it's not their requirement to file. Mm-hmm. But if it's making the equipment function, it needs to be filed on. An example would be an MRI. You just can't have an MRI. You can't just plug it in. You're going to have a room sealed off for that MRI to function, and specialized glass so you can see the patient on the other side. That all has to be reported.
Lead walls for X walls?
Correct.
X-rays?
And that can be extensive. So we're always educating on leasehold improvements. The other thing too is we do work well with our commercial department. Mm-hmm. Anytime we have a question on something that's itemized on a return, we will ask, and we will look on their on the account to see if it's reported there. So we have a really good rapport with our commercial department to make sure that we're not double assessing. But I do want to mention that the Florida, hello?
Okay.
The Florida Department of Revenue has guidelines on this, and they have quite a few pages letting you know what's real and what's tangible to give you an idea. And I do recommend a lot of our new businesses to go to the Department of Revenue just to get an idea of what we do and what's required.
In a worst case scenario, if it's too much for you and you just like to speak to someone personally, we're always here from 8 to 5. So if you have a question and you'd like to call our office, you can always ask us then on whether you consider this to be taxable or not. And we'll let you know.
And we get quite a few calls on that as well. So Nikki, here is our extension request that you can file online. This is a sample copy. All you need to do is give us your business name, physical location, and if you have the account number, we really appreciate you putting that on there. If not, if you're a new business, just let us know it's new. If you even have your FEIN number, you can put that in there as well. There's a little link at the bottom that says you're not a robot, and submit, and you'll get an automatic response, and you'll get a page for each account that you request an extension. And again, this is due by March 31st. We really recommend you filing on that.
Now, Nikki also asked, are the requests auto-posted to your Canvas system?
No, they are not currently auto-posted. That's something we would love to have in the future, and
It's a work in progress.
It's a request on our end, and eventually we hope to have that soon. But right now, everything is manually touched. So not only is the mail coming in the month of March, extensions are coming in. We also get a lot of questions. So we are very busy this time of year. So yeah, it's something we're looking forward to getting to make it easier for us to process. So we're at the end, and we have a couple of questions that we commonly get calls on, or if the appraisers are in the field and they're walking into a business that's saying, "What are you here for?" They have to explain it. So we'll just go through these, and if you have any questions, keep sending them through. So the first question, Kalani, are you answering these?
Sure.
Okay. So why do I pay taxes on something I already paid taxes on?
Now, when you submit on your tangible tax return, this is designated by the state. You have to list all costs associated with that original cost. That includes the taxes that you paid on the equipment, the shipping or delivery of the equipment, and the installation of the equipment. So it's by state guidelines that we're required to ask for you to put all those charges, because that is the value of the market value that you purchased that item for.
But that is the cost. So yeah, that's the cost of what you paid for it, and that is what is required on these returns, the original installed cost. And then if you are selling it, or if you go and buy it used, you're still going to pay sales tax.
Yes.
So that is in a used market, that's going to be fair market value.
Yep.
If you're buying a used piece of merchandise, and you're going to pay sales tax, and that's the number that we're looking for. Included in that original installed cost. Okay, Kalani, so what about this question? My landlord owns some furniture. Do I need to file on that?
You know, it's a good question. It depends on what it says on your lease agreement, or if you own the building. You know, a lot of factors go into it. Let's say you're buying you're buying a turnkey business, but you're not purchasing the building. So the landlord may own some of the equipment in it, and the new person might be purchasing the equipment to put inside of it. What I suggest is to look at your lease and see who is responsible for what items. If you, as a taxpayer or the person who owns the business, if you're responsible for that, then you would be required to file and list all items for that. Now, if there's some items that the landlord would like to be responsible for it and that you will not be paying taxes on, or that you are not responsible for in your lease, then we would create a separate account, one for the business entity itself, and then one for the property owner.
Yeah, don't we have several accounts that have multiple businesses that have multiple accounts associated with them?
Oh, yes. A lot of furniture stores, a lot of car dealerships. You can go inside of it and they'll have the car dealership itself, and then located in the same building, you'll have a financing company inside of that same dealership or that same furniture store.
Yeah, even like a gas station, sometimes the gas
Could have
tanks,
multiple accounts.
the real property owner may own the tanks and the pumps, and the convenience part is owned by, put in by the vendor that's in there. And then sometimes the signage is separately filed.
Yep.
And then leased equipment always comes into play. So we could have multiple accounts on any one site.
I've seen 3 is quite common. One person who owns the tanks, one person who owns the convenience store, and then another leased account where if you're using Coca-Cola products, they might give you a Coca-Cola machine to sell their products inside of that will be owned by the other company.
Correct, yeah. Okay, let's go on to the next one. What happens if I don't file? Did I miss one?
You mean, well, we can go back to that.
Which one? Yeah.
I bought the equipment used.
Yeah, okay, whichever one you want to answer. I bought the equipment used, how do I fill out the form? Sorry.
It's easy. It's easy. It's nice if you have a good report. If you bought the equipment used, say from, like I said, a turnkey business. If you get a letter of release, if you have a good enough report for them, then we can release the previous tangible tax returns to the new owner. That would give you a complete breakdown of all the equipment that was ever filed at that location. It will tell you the original cost of the item. It'll tell you the year of acquisition, and a lot of times the equipment for that, which is really handy.
Yeah, condition is an important part of the return.
Very much so. And another thing that we can look at, say you are not granted that release. If you purchased that used equipment, let's say if you bought it as a whole business, you would have a bill of sale and they would allocate a cost of all of that, the equipment that they valued for it, either through a study or an appraisal that they got for that business. And then we can use that current year of acquisition.
Yes, if there's an appraisal, we're always looking to get that information.
But as far as how to file, some people they give it to their CPA, but we have no problems. If you give us a call, we'll walk you through it.
Yeah. Okay, so what happens if I don't file?
That's where the negatives come in.
No.
Yes, there are negatives related to taxes, unfortunately. First of all, you lose out on your exemption, which is the bad part. That's a $25,000 exemption that wipes off $25,000 off the assessed value right away. Another thing you get is a 5% penalty per month that you don't file, up to 25% of the taxable value.
Assessed value.
The assessed value,
yeah.
Which, depending on the company, can be substantial.
Yeah.
So
losing the exemption is typically anywhere, $500 or so loss by losing that exemption, but the penalty can be extensive on the 25%.
And for me, also the worst thing that can happen is if you don't file, you lose your right to appeal. So if a value was placed on your business because you never filed, so we don't know what you have, you don't have any legal recourse to disagree with us. So I always suggest to everybody to file because it gives you the right to appeal the value and have your day at a valuation adjustment board hearing.
That's because when the appraisers are out in the field picking up businesses, they have to put a value on everything that they add to the roll, regardless of a return being filed. So we have to determine what kind of value each business has out there.
Because in the state of Florida, all property is to be assessed.
Right. Here's the last one. What happens when a tangible bill becomes delinquent and the equipment is either sold or left behind?
Well, there's a couple of ways to answer that. Now, it depends on a lot of things. Now, whoever owned the equipment on January 1st is the legal owner of that bill. But our job, our tax bill, the tax bill that the tax collector makes follows the equipment. So if it was belonging to one person in January 1st and they refuse to pay it and another business goes into it, the bill attaches to the equipment.
Yeah, there's a lien on the equipment on January 1, once that assessment is placed. So if it follows, that lien follows the equipment. So if somebody sells that equipment, they're selling it with a lien, and if they haven't paid the bill. And this happens quite often because our assessment date is January 1, and the tax bills are in arrears then come out in November. So there's a big gap in the timeline getting that bill and our assessment date. And businesses buy and sell each other all day long.
Yes.
And we are not sitting at the table at the sales. So it's really important that you have a qualified attorney or representative to either prorate those taxes or make sure that they get paid and who's paying them.
It always pays to do your due diligence. A lot of business contracts that I see where they purchase the turnkey business, the previous owner may allocate a prorated cost to it. I have seen that dozens of times where they were owning the business for 3 months and they take an estimate of the 3 months of taxes and they give that as a credit to the new business owner.
So there are times that a business will sit idle. There's nothing going on. It's already closed.
Yep.
It's just ready to somebody to come in, like a restaurant, turn that key, fire up that grill. What happens if it's closed at the end of the year and nobody's in there yet? Who gets that bill?
Well, at January 1, like I said, whoever's in possession in January 1 of the equipment is responsible for that bill. So let's say the tenant moved out, all the equipment is in place and it's a turnkey operation, that bill would go to the property owner.
So, and the property owner doesn't necessarily know that there's a bill out there, even though they should know if there's a business in their establishment that they are ultimately going to have a tangible bill. So a lot of times we get a lot of calls on that. If they say that the equipment's not worth anything, then that's up to the tax collector. They can seize the assets and satisfy that lien. But that lien stays in there, out there, until that bill is satisfied. And that lien there could be multiple years out there. So it's important when when somebody's buying a business that they research and make sure there's no tangible asset, bills out there.
And we also try to do our due diligence as well as, let's say if a company does not file, let's say we didn't know that they went out of business because they didn't file their tangible tax return. We generate a list of non-filers within the county. And then we try to reach out to some of those people and say, see if they're open, see if they're closed, why they didn't file, if the equipment is back to the landlord, and then we try to get them to file on the equipment.
Yeah, we do send a lot of letters out while we're processing returns. And one of them is once we've gotten all the returns, we'll send out a non-filer letter to let businesses know that we didn't receive it. And it could have been sent, it just didn't get to us. So the appraiser's names are on there so they can give them a call and resend that return if they've already filed. And we also send letters out if we feel that we are missing something on the return. And the appraiser's name is also on that. So those are important to also address if you receive one of those.
One of the aspects I do like about our office, if we mail the tangible return, we mail the trim notice, if we don't get it back, we still scan it to the account. If we do get that mail back, say it's non-deliverable or it's forwarded to a different address, we scan that into account and then we attempt to find that address.
We do our due diligence, yeah.
We do our due diligence so that we can get this important documentation to them.
Well, I think we're done. I hope that gave you enough information about what we do in our tangible department. We are available if you have any follow-up calls, or you'd like to give us a call. The number's on the beginning of this presentation. Again, my name's Lori Dorian. This is Connie Cooner. If somebody has any questions, we're available to answer that.
We'll just open up to any questions. If you have any questions, you can put it into the chat feature or just unmute yourself.
I heard you might have a new website coming. And there might be available features for business owners to access their TPP accounts. Is that true?
That is true. We are waiting for that to launch so that our information will be out in public. You can look at every business that we have in Pinellas County, see what they're assessed for, see them, locate them on a map as well. So we're very excited when that does launch.
And the only thing you will not be able to access on our new website is the individual tangible tax returns of separate businesses, as all that information is considered confidential.
Right. So the only thing that would be available would be the business name, ownership, assessment, if you filed a return, if you filed for an extension, just what you would find on a trim notice that is public record. So, but it would be nice to see. We have over 70 public stores in our county, and you can pull them all up and see them all.
It's as
Thank
close
you.
as you can get to us without being in person.
Well, if there are no other questions, I just want to thank Kalani and Lori very much for joining us. And we encourage everyone to visit our website at www.pcpao.org for all other upcoming public education sessions. We host a number of sessions throughout the year that are tailored towards homeowners, business owners, and real estate professionals. So we really encourage you and hope that you can join us for a future session. Thank you all and have a great afternoon.
Thank you.
Thank you.
Thank you. Great job.